The world's largest Eastern bullion buyers are waking up from their pandemic slumbers as Western efforts to bring about transparency to the silver and gold price discovery continue failing and falling on their faces. More on that story later. Great news this week is I've returned fully to my desk after a short few days touring the Pan-Americana countryside. Meanwhile, the fundamentals, trading price action, and market sentiment for silver and gold have seemed to turn for the better. To start this week, we'll lean heavily on many of Daniel March's latest physical bullion flow tweets so I can further explain what has been happening. First, watch what the aggregate central banks do and often ignore the narrative games they play. Central banks are on pace to collectively break their record 2019 gold bullion buying this year in 2021. Meanwhile, Poland is gearing up for another 100 metric ton gold bullion buy to begin 2022. The Chinese Shanghai Gold Exchange is delivering gold bullion at volumes not seen since before the pandemic kicked off to start this decade, the 2020s. Indian gold bullion demand this year is going to rival record volumes hit in the 2010s. See this chart for where 1,000 metric tons of gold bullion demand stacks up historically. Silver squeezers and silver bullion bulls out there, buck up. The Indian silver demand, gorilla of the 2010s, may be returning as Metals Focus reports that over 400 metric tons were imported into India in September 2021 alone. Here is where that amount stacks up to the way India bought silver bullion in the 2010s. If and when the Indian nation returns to its average 172 million ounce silver demand levels per year of the last decade, if that happens this decade in the 2020s, good luck, London, and unsecured ETFs like SLV and SIVR changing your perspectives yet again. A reminder of how bullion bull market price increases eventually take away escalating demand from near record high gold to more undervalued silver, the supposed poor man's precious metal of choice during building eventual bullion bull market manias. When the increasingly less poor Indians of the street see gold's price climbing a parabolic wall, expect many of them to switch their bullion buying preferences to silver and import demand levels to increase sharply for Indian silver flows ahead. Moving on to the idiocy that is the inflation narrative con game ongoing, longtime silver bullion bull Bill Fleckenstein pointed out how asinine this Bloomberg opinion headline is, that underreporting escalating inflation somehow doesn't hurt average U.S. citizens. This is a crime ongoing for anyone who bothers to look at the data, as accurate price inflation is likely running at double digits currently, if we take into account the actual escalating prices on rents and housing prices in the USA. The rigged U.S. government's CPI, or Consumer Price Inflation data, has year-over-year shelter price escalations at a laughably low 3.2% increase. But just a few cursory glances at data, and we know that's a lie. Even the cost of living adjustment for Social Security is going up nearly 6% for next year, 2022, as the poorest among us often suffer the most under high inflationary regimes. Meanwhile, get ready for a cold winter full of fueled escalating natural gas price spikes to come. But don't worry, the narrative gamers at the Fiat Federal Reserve have no shame as their lies get exposed for all to see yet again. Anyone who thinks significant price inflation is not the primary tool for defaulting on our record debts and not save for liabilities ahead, well, I have a bridge down in the Florida Keys to sell you. Tyler Wall, CEO of SD Bullion, was on Yankee Stacking Channel yesterday with a big announcement for you, many of whom are our customer base. So be sure to check out that link out in the show notes and comment section below. I'll also leave it as a click-through video at the end of this week's SD Bullion Market Update for your convenience. So, hop on, figuratively speaking, and let's do some more cruising through the most critical bullion bull market updates for this week. And be sure to share this content with those whom you think may also enjoy it.
Hello there. On behalf of SDBullion.com, this is James Anderson with your Bullion Market Update.
Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
You know the drill. SD Bullion is giving away a box of 500 new 2021 Silver Eagles that could have your name written all over it. But if you don't enter, it could go to someone like Silver Steve here. And while we like Silver Steve, he really doesn't like to share. So click the link below for your chance to win.
Click the link below to enter your chance at winning this 2021 SD Bullion Type 2 American Silver Eagle Coin Monster Box giveaway of 500 Silver Eagle coins. Official sweepstakes rules can be found at www.sdbullion.com/sweepstakes. Good luck to all of you who enter and for your chance to win.
Full transparency, I'm recording this SD Bullion market update on the afternoon of Thursday, October 14th, 2021. Video being released the day after. Yesterday, Wednesday morning in the U.S. Comics Open, silver and gold had a snapback rally that put these short sellers on their heels. This recent bullish price action has also given rise to some seriously bullish sentiment across the precious metals complex. This week it'll be interesting to see how both monetary metals can close in their respective derivative price discovery markets. Will gold clear and close above $1,800 an ounce, or possibly even clear the critical $1,820 an ounce threshold ahead? And will silver get beyond $24 an ounce anytime soon? The lately building gold-silver ratio head and shoulders formation perhaps might give way to a fallback towards the mid-60s and perhaps beyond as we come towards the end of this year, 2021, into 2022. If we were to take some of the analog 1970s versus this 21st century bullion bull market statements I've made on this channel in months and years prior seriously, well, now is the time to start the valuation climbs. Here's a quick look back at what I'm referring to.
This 21st century bullion bull is taking about 2.5 times longer to play out than the last. In every conceivable facet, this current bullion bull market is larger and more wide-scoped than the last Western-driven 1970s bull. Looking back at the late 1978 into early 1979 year for gold price action, we see it took 6 months for gold to finally clear its then nominal price high of $255. Here we have today's gold bullion bull market denominated in fiat Fed notes as well. And we can see we are now 7 months into this current gold price consolidation. In percentage terms, we could fall still further. As last gold bull in the late 1970s, the consolidation fell roughly 20% before the rebound and marching on to its mania phase peaking in early 1980. If we use the 2.5 times longer stretch analog for today's gold bull, we're looking at a new record gold price by later this year. In the last version of the gold bullion bull, gold more than 3 multipled from $255 an ounce to over $800 an ounce. On this very SD Bullion channel, I've laid out multiple times why my belief is gold will more than 3 multiple before this bullion bull peaks out in fiat Federal Reserve note pricing terms. Of course, if high inflation gets running hot enough, all bets to the upside get skewed much higher. Looking back at the now completed gold price cup formation, this chart tweeted today by Craig Hemke of tfmetalsreport.com. Let's take a look at his silver version that he put out too for an idea of how this breakout just might run in the months and years upcoming. These now built and building price cup formations are very important. Once they are cleared, the upside energy that can follow, they can become stuff of legend. Check out this 1970 to early 1980 gold price cup breakout. 4 multiples followed from here. And on the silver side, more than a 6 multiple followed. Here's where we stand again this 21st century. If you are new here, stay to the end of this video and click through to learn more on why we think this silver and gold bullion bull market is just warming up for the mania to follow.
The 2.5 times 1970s versus 21st century bullion bull market analog is calling for gold to make a significant move now through next month, November 2021. We shall see if the time frame overlaps accordingly. Again, here's a chart I often use to explain potential timings ahead. Remember back to the start of this year, 2021, the record media attention freely given to the bullion industry by the likes of Bloomberg and CNBC, totally unprecedented, as the Reddit silver squeeze got underway in late January 2021. Well, a draining of the COMEX has since ensued. Steadily after that, the registered amount of available underlying fractional reserve COMEX silver bullion is now under 100 million ounces. That's down over 50 million ounces from its peak before the silver squeeze started less than a year ago. The Wall Street Silver subreddit now has over 160,000 members and growing. And with that, there are rabid members that continually come and are committed to figuratively wage war this decade by stacking silver bullion for the long haul. One of the creative members of the Silver Squeeze clan, Creflo Silver, points out that it would only take a bit over a mint case of silver bullion delivered to every one of the current 160,000 WSS members. It would be around 618.75 ounces of delivery per member in order to suck the COMEX dry of its current registered silver bullion pile. Now think back to the start of this week's update and ponder what happens if and when Indian demand returns to its former 2010s level. Combining all this is just not much silver bullion to go around. As well, too, while having idled of late, Sprott's PSLV stands ready to take on new inflows and begin jacking up its silver bullion ounce holding levels as the months and years progress. And of course, we're not the only ones turning blue in the face with silver bullishness. Peter Brandt, a longtime COMEX derivative silver trader, is tweeting mega bull shoutouts on silver ahead. Have a look at some of his latest thoughts. First, about not pitting one another, being bullion versus crypto arguments, and not being wed to one or the other. But also, he's flashing the mega long-term silver cup handle that's building. Also, he stated this week in a tweet that a $40 an ounce silver, quote, moonshot is on his silver point and figure chart. Transitioning now to a story we jumped on right before we began this SD Bullion YouTube channel in late 2019. Back when the New York Federal Reserve's repo loan fiasco from September 2019 kicked off, some of the loan data from that month just came to light thanks to the great work by Pam and Russ Martins over at wallstreetonparade.com. While it doesn't surprise us the various mega banks and fiat financialized institutions involved in the overnight lending fiasco that's really escalated since, what's surprising is truly the size and scale that has mushroomed into since the September 2019 repo loan fiasco kicked off. Look in comparison at how ridiculous it has gotten. And again, if these transitory emergency overnight loans give you confidence in our increasing fiat financialized system ahead, I again have a bridge down in the Florida Keys that's still for sale. And now to finish this week, an exclusive report by Reuters. Headline reads, "Banks prepare to scrap LME gold and silver contracts, sources say," by Peter Hobson and Pratima Desai. A group of banks that partner with the London Metals Exchange, LME, to launch gold and silver futures in 2017 is preparing to abandon the project after hoped-for volumes did not materialize, three sources with direct knowledge of the matter said. Such a move would end an attempt by the LME, which dominates industrial metals trading, to capture part of London bullion market, which is the world's largest, with gold worth some 17 trillion changing hands last year. Again, that's high 90 percentile derivatives because the gold market is not that large in physical form. The LME launched the contracts with partners including Goldman Sachs and Morgan Stanley, who agreed to promote trade in them in return for 50% of revenues generated. The project partners had hoped tightening regulation would push bullion trading in London away from the over-the-counter OTC deals between banks and brokers to exchanges, which regulators see as safer and more transparent. But the biggest dealers, which include JP Morgan and HSBC, shunned the contracts, and after Societe Generale, one of the LME's partners, closed most of its commodities business in 2019, trading dwindled to nothing. Quick pause. Funny how the respective seemingly lawless City of London-based custodians for the world's largest silver ETFs, like SLV with JP Morgan, and the world's largest gold ETF, like GLD with HSBC, shunned bringing potential transparency to opaque silver and gold derivative markets they often dominate via outsized concentration. If you yourself out there own either SLV or GLD for the medium or long haul, go read their prospectuses. And know with these two derivatives you legally own no bullion. And finally learn what the term unsecured creditor means for you when and if things go really wrong with either trust. Back to the article. Three sources at banks partner with the LME said they would meet in coming months. Two said if nothing had changed, they'd pull out. Third said it was clear the contracts had not been successful and the LME deal was up in the air. There's not been anyone who is keen on keeping it going, one of the sources said, adding that his bank was paying a couple $100,000 a year to maintain the contracts and had millions of dollars locked up in default fund for them. The deal with his partners had an initial term of 5 years, LME Chief Executive Matt Chamberlain told Reuters. It's very possible they choose not to continue up to 2022, he said. Others that partnered the LME are ICBC Standard, Natixis, Propriety Trader, OSTC, and World Gold Trade Council, WGC, a subsidiary of the Bank of England, an industry body. World Gold Council strongly believes in increasing the transparency and investor accessibility to gold. That's why we support LME Precious and will continue to collaborate across the industry on similar initiatives. Mike Oswin, WGC's Global Head of Market Structure and Innovation, said in a statement. All the banks involved declined to comment. OSTC did not respond to a request for comment. Critical mass. Although the contracts had a positive start with 14.3 million ounces of gold worth around $20 billion and 120 million ounces of silver worth about $2 billion trading on LME in September 2017, activity began to fall. In 2019 and 2020, a bullion price rally pushed trading in London and on New York Comics Exchange to record levels, with about 1 billion ounces of gold trading hands in each venue in March 2020. The LME's contract have not traded since mid-2020. Last year, the LME's partners wrote the value of the project down from $2.3 million to zero. The accounts of a company set up by the partners show. There wasn't enough critical mass for the banks who wanted the market to go on exchange and go cleared compared to perhaps some other banks who wanted to stay OTC, said Chamberlain. Despite the failure of the contract, sources involved in them and at the banks that did not use them said trading in London was likely to eventually go on exchange because that is what regulators want. In a few years, someone will try this again, one said. Well, that's interesting. In a few years, someone may try that again, but I'm guessing that China is probably going to have a bit more say in the actual day-to-day price discovery of physical gold, and probably India as well. So good luck on that one, London, and best of luck on bringing some type of transparency to your opaque markets. That's all for this week's SD Bullion Market Update. Here's hoping you out there have taken advantage of recent price weaknesses to build a prudent bullion position, as we are possibly heading toward a bullish close for the year 2021 and onwards into 2022. As always, to you out there, take great care of yourselves and those you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.